Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or on any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, LME 3-month copper. The supports on this market continue to be the same as they have been since mid-May, and possibly, if you take out one aberration, since late April. They are the green short medium moving average, currently at 97.44, which the market has repeatedly pierced, though including today, but which for now has decided to still not let go completely. We'll see about that because it's moving down well below that. Then there is the mauve medium moving average below the market, which is currently at 95.84, which held up the market as recently as mid-July and early August. The bright red neckline extension, currently at 95.70 of the November 24 to February 25 reverse head and shoulders bottom. Further down, the gold long moving average, currently at 94.32. Added to all this, at the start of July, prices rose up into the overhead band of congestion between 97.50 to 99.95, an area I described 9 weeks ago as a gossamer area, even closing over it, but it closed only the once, and prices came back down to rest on the previous well-highlighted congestion zone below, between 93.95 to 96.06, which contains the 50% Fibonacci line of the October 23 to May 24 move at 94.80. Now, prices since late June have yo-yoed between the overhead 97.50, 99.95 congestion area and the 93.95, 96.06 congestion zone below, though I do note with somewhat decreasing amplitude has been going lower all the time, such that I have drawn a late June to date downtrend, and that's currently at 99.01, a downtrend that is really as yet untested, and with the bright red neckline extension could be seen as a possible descending triangle pattern or wedge pattern. So for the moment I'll leave that as it is, but yeah, for good order's sake, I'll once again recap the 3 congestion zones which seem to be working our way up and down through. The first was below, between 91.83 to 91.86, and is the weakest of them. The second is the already mentioned area between 93.95 to 96.06, which is the one became clogged down within over April and May, and from which we have moved up and away from for a while at least. The final one is the one we've tried working our way higher through, but we seem to be failing, between 97.50 to 99.95. Overall, we've been chewing our way up and down through these for quite some time now. LME aluminium. As I've stated here many times, there are a number of patterns here, one within another, all happening at the same time, all affecting the market in their own way. And I thought for the last few weeks that the picture may be starting to get clearer, but looking last week and again today, well, maybe it's becoming murky once more. Of all the features, by far the most consistent one has been and still is the bright red, shallowy bullish shift picture for the mid-December 23 to late July 24 move. For a while in March and April, we moved down below the bright red middle time, that's overhead, currently at 26.90, and down towards the bright red lower time below, currently at 23.81. But this held, and we have moved back up closer to the overhead middle time, testing it but not pushing over it. Nearer and below, we have the support of the flatlining gold long moving average, which we're testing at the moment, currently at 25.66. And that gold long moving average is within a small congestion band between 25.63 to 25.81. Interesting, the rising green short medium moving average, currently 25.81, which in the past really didn't look that great, had risen enough, to initially reinforce the gold long moving average, but now seems to be starting to become resistance, if not necessarily a good resistance. Further down is the now flatlining mauve medium moving average, currently 25.17. which also doesn't look that great, though it is right on the 50% Fibonacci line for 2025 at 25.80. I suspect the next decent band of support is the one created back in May and early June, roughly between 24.41 to 24.85, though I could be wrong. Looking overhead, we have congestion at 26.50, that's just short of the big old 50% Fibonacci line of the 2008 to 2022 move at 26.75. Now, separate to this, we also have, or should I say, had a mid-April to mid-August dark blue bull channel, a major feature on this chart, currently at 26.23 to 28.24. The lower trend line looked solid enough a few weeks ago. However, 3 Thursdays ago, prices punched down and closed below both. However, the market at the time did not manage to establish itself below the gold long moving average. So since then, the dark blue lower bull channel line has been breached, and today is on the verge of me calling it broken with all the implications that may mean. All this action has created the opportunity for 2 patterns in the relative short term. The first is to regard the action throughout August as a possible small double top, with a final potential below the mauve medium moving average. I'll not set targets for this yet as it's not completely confirmed, but we are very close to doing so. Secondly is to look at the whole late June to date action as a possible complex head and shoulders top, with further implications below than the possible double top. Likewise, in this case, it's too early to talk about targets below, but I would suggest looking at the flatlining gold long moving average, which, as I say, we are testing today, as a proxy for the neckline until a proper one is established, with all the implications such a move lower may have. Thus, caution on the downside. LME 3-month lead. A mid-April bull channel saw the market breach lower on the downside 5 weeks ago, when seemingly repaired, only to finally break lower 3 weeks ago. This trend line was originally seen by me as part of an ascending triangle pattern between May and June, since development of mid-April to late July bump and run reversal top, as well as part of a not finished bull channel. Now, going to the bump and run reversal top, as I said 3 weeks ago, and I quote, if this pattern decides to follow through on the downside, then we have a primary target X down in 1964 zone, just above the bright red extension to the August to December 24 head and shoulders neckline, and a secondary harder to reach target X1 down at 1916, coincident with the low of January this year. End of quote. The second concerted attempt lower travelled further down than the one in mid-July and reached the bright red neckline, currently at 1958, of the August to December 24 head and shoulders pattern. In the process of tripping lower, the primary target X at 1964 was reached. But that was all, as prices have since then moved back up, hesitating around the various moving averages overhead again back then, and importantly making lower highs and messing with the previously highlighted congestion between 2001 to 2003. That's the prices, not the dates. Looking further up, we have congestion between 2036 to 2039, including the January 21 high at 2039, and then at 2060, which was breached, but which eroded the bullishness enough that we formed a horn top in early July. There's one further feature, and that is the exit pattern from that bump and run reversal pattern. That's made a mid-July to date descending wedge pattern, currently 1945 to 1998. This pattern is becoming established, though for now I've not chosen to highlight it. And today we are seeing a move lower down from the upper trend line. Indeed, the last 2 peaks since mid-July could also be seen as a possible cat's ears pattern. A bearish pattern akin to a double top, but only forming after a decline such as we saw in early and mid-July, and then a double top after that. Now watch out for this pattern developing, as the bright red neckline previously mentioned could also be seen as a neckline for this pattern. Finally, there's one additional point I would like to make, and it is the point I've been making here since the start of this year, and I'll continue to do so going forward. It has been, and still is to me, the most important point of all. So at the end of December last year, we saw that 2024 created here a very large and rare annual key reversal down in LME 3-month lead. Hence, one should look at all things going forward this year in this meso in the shadow of this longer term bearish pattern. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.